This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro, and today I'm going to talk about the stock market, go through the SPY and the QQQ, and I want to give the key levels to be on the lookout for. On this channel, I like to look at multiple time frames and analyze based on trend and momentum, but we're at a kind of a key spot here, and I want to make sure I frame out these markets for you and let you know where the key level is above and below, and what the likely targets are if we do get going to the downside. So let's go ahead and get into this video. So now, just so everyone knows, I'm doing this market as we're closing on Thursday for Friday morning, okay? So the monthly chart has started the process on the spider here of looking like it wants to work its way back to the 18-month. It didn't make it all the way. I think we want to work our way back down, and it might just be more of a consolidation pattern, but it could actually come down and test this prior low, and that would help it meet up with the 18-month line, which it has not touched now in almost 2 years. Now, I wanted to point this out on the weekly chart because I think this is pretty crucial. What is taking place? So we broke the trend and the 18-week line for the first time in this whole move, essentially, and caused the 18-week to flatten out. And noticed last week, the high of last week was right around this. In fact, it touched the 18-week line almost to the penny and then turned down. We got pretty close to it again this week and have turned down again. Now, if this line actually gets itself turned so that it's falling, then I would say that this uptrend that has been in place is truly over. And that doesn't mean we're going into a downtrend, but the uptrend that's been in place, I would constitute as ending. So if that's true, then we have two options. Either we go sideways or we head down. So one of the reasons why I thought this was an important video is, as I've mentioned before, the fib level, let me move this, is right here, right around the 618 retracement. So if you take this peak down to this drop, we rallied up to the 618, and we're actually bouncing around in between the 618 and the 382. I think these are pretty key levels. If we break the 618 to the upside, I would view that as a pretty bullish sign for the market. And it might only mean that we're going to work our way higher to the upper end of the range and not necessarily a trending move to the upside. But I think what it does is it really softens the blow as in terms of the potential for this thing to get really going to the downside. And the reason I say that, let's go ahead and get into the daily chart. And let me just show you this. So we've got a harsh down move, and look at the ADX pattern. So I like to focus in on ADX and look at what the DI lines are doing. So we've got a move here where we made a peak in red DI and a bottom in green DI. So this is showing the strength of the sellers. And if red DI can make a higher high here and green DI makes a lower high, but actually more important to me is if red DI makes another higher high, that's a continuation to the downside for this market. If it's confirmed by price. So if price comes down through these lows, take out this bottom here, and we get a continuation signal where red makes a higher high in the red DI, then we have confirmation that the trend is working its way back down to the downside. Now, I think you should be also watching this fib level coming back to this way. So if I look at that, it's the 38% retracement is this prior low, and we're trying to hold it. Now, if we break that, then I think the key level is around 440. If we don't hold 440, then I think we have to start thinking there's a lot more risk in this market. if we take out this prior low and the red DI makes a higher high and the green DI makes a lower low, then odds are pretty high that we're going to take out the 440 level too. So, I mean, these are things that I'd be keying on, and this is all about framing out this market. It's not, you don't, I think a lot of people want to guess. They want to make a decision and just do it in advance. And I don't think you need to do that. I think you can frame out what's going on. We can look at the hourly chart and we can see we've got a pretty good move developing to the downside here. And red DI is starting to get going again. So if this comes down to this area and rallies back to the moving average lines and red DI can hold above 25 and we get this look where red is holding above the green and it's holding above 25 and price comes up and fails at these two moving averages and turns down, then that really increases the odds of a break of this support area. So if you want to anticipate, let the smaller time frame give you a heads up, give you a signal to get short. Don't just guess. So that's how I would do it. I like to frame out these levels. So I know that these highs up here, it's right around 459 on the spider, is a really key area. It happens to be the 40-day. But it's the 18-week, it's the fib level, the 618 fib level. It's been tested twice now. If we come up through that, then what's going to end up happening is green DI is actually going to move higher. So red DI is going to come down and green DI, they're going to crisscross. And now all of a sudden this bearish downtrend is going to be eliminated, and we're going to be going into a consolidation phase, and price is working through resistance. So that, I think that's the potential. If this market's going to make it here, that's the way I think this has to play out. It's not going to take out this low. It's going to hold, and it's going to go back up through these prior highs. If it does that, then I would feel a little bit more comfortable with the idea that this is more of a neutral pattern, at least for now. And not something that's going to go firing down through these lows and work our way and test these prior bottoms. So that's the S&P market. The Qs is a little different. It's weaker. It failed at the 50% retracement, and it's still showing a lot of weakness. Now, the difference is, or what I should say, what's the similar situation is red and green DI. If red makes a higher high, and price takes out this prior low, then we have continuation to the downside. That's how I'd be keying off this. It wouldn't take very much to take out the 50% retracement of that, of this rally. Let me just fix this. It's this low. So if we come down through this low, and red DI makes a higher high, we have a continuation signal to the downside, and we're going for a full-blown test of these bottoms. That's really how I think I would frame these markets out. You don't have to be a rocket science here. You don't have to guess. We want to do the same thing in this market. We want to look for a sell signal on red DI on the hourly chart. Look for red to come up. It's about to take out green. Look for it to make a higher bottom. Look for this price to fail at the moving averages and make a lower price peak. And then I think we have a little bit more confirmation of a 1, 2, 3 topping pattern. So that's what I'd be looking for in both of these markets. Just be on the lookout for those key areas. Now, the one thing I'll tell you is that the Qs have already hit the 18-month line. The S&P target for this move is down at 412 right now if it happens fast. But if it happens and it takes a little bit of time, this line is going to keep rising. This 412 line is going to keep rising, and it'll maybe meet up with it a little bit higher, 413, 414, possibly just where this prior low is. So that would be the target for this trade to the downside. If it plays out and we get this signal, continuation signal on the daily, I'd be looking for a target down around the 18-month line. All right. Go ahead and post any questions or comments. We'll see you next time.